Kia ora. Ka pai, David. Thank you for your welcome. Ngā mihi nui kia koutou, ko Barry Coatsaho, ko te kārahi o te patea whai whakaro, nau mai, haere mai, whakatau mai ki tēnei hui. So a very warm welcome to everybody. We're very pleased to see you all here, and we're grateful for you to fit this conference into your busy lives. Before we start, a huge thanks to our sponsors, Morningstar Sustainalytics. We're very grateful to you guys for the partnership that we have. For Australian Ethical, who are not only a sponsor for this conference, but have also been helping us in other ways, and we'll come to that later on. To First Sentio Group, Generate and Trust Investments, thank you for your support. The ongoing support of Foundation North has been fantastic for Mindful Money, and particularly around this agenda of positive outcomes and investing for good. And then finally, thanks to our media partners, Good Returns and Informed Media, and you'll find some copies of the Informed Media magazine on your tables. So without further ado, I want to start off and talk about our journey. So it's 7 years since we had Grant Robertson, then Finance Minister, opening up our first conference. And he was very generous in his support of Mindful Money in those days. And what we talked about in that first conference was the mission of Mindful Money in making investment a force for good. And in our analysis, the key element in order to make change around reorienting investment in New Zealand was about the role of the empowered consumer. And that remains the core of our approach now. So in those days, we started off pretty modestly. We analysed the portfolio of 260 KiwiSaver funds. This year, in fact, we're about to publish, we will be analysing 1,100 KiwiSaver and managed funds, and we do that twice a year. In those days, thank you, yay, yep, applause is always welcome. In those days, we were supported by a small group of family and friends who knew about us. Over the years, we've been successful in word of mouth, in social media, in traditional media, and through allies and friends in spreading the message. We're now running at a rate of 300,000 unique visitors each year to our website. So we think that's a bit of progress over 7 years, and it certainly has managed to get us to the situation where Mindful Money and our analysis of portfolios is a part of very many of the conversations around the investment tables. We've also highlighted areas where the public are concerned about where their money goes. So during the Russian invasion of Ukraine, we highlighted the funds that were investing in Russian companies aligned to the Putin regime. In a very short period of time, we saw fund managers switching out of those funds and divesting at a rapid rate. We've also highlighted the production of nuclear weapons. And when we started, there were 100 KiwiSaver funds that were investing $100 million in nuclear weapons. Within 2 years, that had fallen to about $15 million. So we're seeing, when we highlight these areas, that there is change happening in the pattern of investment. On deforestation, we've highlighted that the companies contributing to global deforestation. And recently, as many of you will know, we've focused on the harm to our oceans and the sources of investment, the sources of companies that are involved in plastics, in toxic chemicals, including the forever chemicals, in bottom trawling, in overfishing, and of course in climate change. And so these are all factors that affect the health of our oceans, and surprise, surprise, there are investments from KiwiSaver and managed funds from New Zealand into those companies, and that's not insignificant, totaling several $billion. So those are some of the impacts. On the overall scale, we're seeing the changing pattern of investment. So we see far less New Zealand investment in unethical companies. And so, you know, that in a way is heartening, because we're seeing the example of New Zealand increasingly being quoted in other countries. So we are often, for example, compared to Australia, and that pattern of investment compared with Australia. So that's kind of where we are. We're seeing that shift of funds in New Zealand, and we're kind of gratified by how things have been going over the past 7 years. But we have now embarked on two very significant changes that we think will change the nature of investment and our impact. So the first of those is that we recently launched Mindful Investing, the name given to mindful money, in Australia. And why? Well, Australia is coming up to the second largest pool of superannuation funds in the world. We started off in Australia with looking at 15 super funds, and collectively they manage 2.1 trillion Australian dollars. So we see the possibility for impact there being far greater than New Zealand, although, you know, 160 billion in New Zealand is important. We see the scale of investment in Australia being an important opportunity. We don't take it lightly going into a major market like Australia, and what we've seen is two things going for us in particular. One, Australians really care about where their money goes that's invested in superannuation. And part of the reason is that they've got a lot more of it in superannuation funds than people in New Zealand do. So the average balance in Australia is about 174,000 Australian, compared to around 30,000 New Zealand here. So it is significantly more important to people's wealth and savings. The second thing is that Australians do not know what's in their funds. In the same way that before we started in New Zealand, people didn't know what was in their KiwiSaver funds. And so we're able to provide that information to Australians, and we're on the track to building substantial audiences in Australia. We acknowledge the great support from Australian Ethical, and I think Russ and Leah are somewhere in the audience. They've played a really helpful role in getting us started, and we're very grateful for that. So we've had several thousand links to our website in Australia. So if you want to help us, you could go and tell all your Australian friends and colleagues to go and have a look at mindfulinvesting.au, which is our website in Australia. So that's the first challenge, and it's one that will take place over a long period of time. It's a slow burn to build up a really significant following in a country like Australia, particularly when you're a charity that is doing so primarily through word of mouth, through the attention of allies, through social media, through traditional media. But we're really happy to have started, and we've got plans to build from here. So that's one major thing that we're doing. But the second major thing is the theme of this conference. So when we started Mindful Money with a mission to make investment a force for good, we had always intended that that force for good has two components. And the one component is avoiding investments that are harmful, and the other component is investing in things that make a positive difference. So shifting funds from harmful investments through to investments with positive outcomes. That hasn't been easy to do for two reasons. One, until recently, there weren't mainstream funds invested substantially in positive outcome companies. And the sort of really good news is in the last few years, we've seen a big rise in investment by fund managers in positive impact companies or positive outcome companies. And that then means that now we can start to show members of the public what part of their funding is going not only into the companies that are causing harm, but those that are producing positive outcomes. The second difficulty, though, is it's extraordinarily difficult to do. And one of the difficulties is the methodology. As many of you may know, actually defining what positive outcomes are is not for the faint-hearted. And there are endless debates around what's positive impact, what's sustainable, what do we mean by this. Over time we've developed our own methodology, and it relies on a consumer perspective. From the consumer's perspective, when you look at investments, you're not so worried about the additionality of your own investments. You want your money to be going to something that creates benefit. And so for most people, they're happy with that being either listed companies or unlisted companies. So we're not following the more rigid definition of impact investing, which is primarily reserved for IPOs and private capital, but actually it also embraces listed equity as well. The second aspect is that in our methodology, we are being quite, how should I say, quite definitive about what we mean by significant positive outcomes. We're not talking about business as usual where something is slightly better than the next company. We're looking for changes that are substantial, that are transformational, that actually will make a significant difference through the operations of the company. So this is what the consumers want. They want money to go into companies that produce positive outcomes. So on issues like the one shown there, that's consistently shown in our annual surveys. So when we've done the methodology around how we do this, we have been busy building a website, as well as verifying the companies, doing the testing, doing the measuring, and we're at the stage where we have a draft of how this may look when we launch, which will be later on this year. So we're going to be using a system of dials, and it's going to show the percent of the fund that is invested in positive outcomes. So those investments will then be broken down by type of investment, and then ultimately by the specific companies. So as you can see, we're talking about climate solutions and renewable energy. We were talking about circular economy, community development, health, and water and nature. So these are the areas of positive outcomes that we're particularly focusing on, partly because those are the areas where it's quite possible to define that significance in terms of positive outcomes. So we will, as I say, be launching those later this year. It'll be followed by a major campaign. Our team has been stretched in doing this amazing work on top of also launching in Australia. And I want to pay tribute to our Mindful Money team. We are a relatively small team, but I'm very grateful to be a co-leader of just a fantastic team who are doing great work. So can you all kind of put your hands up and wave? So please make sure you introduce yourselves to them. This is going to be a multi-year campaign, and we will be going out to the public to try to engage the public around their desire to not only avoid harm, but actually invest in things that make a positive difference. All of the surveys suggest that's going to be very popular. We have yet to see, but we're excited by being able to give people a positive vision of what their investment can go towards and what can be achieved as a result of their investment through KiwiSaver and managed funds. It comes at a time when, you know, we really need this to happen. We really need investment to be accelerated into the climate transition, because otherwise we face a chaotic climate future. We really need investments into nature and regenerating nature to repair the damage and actually put us onto a more regenerative path for use of our natural resources. And we really need to start to address issues like inequality in New Zealand society and globally. The time has come for these intergenerational challenges to be met, and the investment sector has a really important role in stepping up to this. So we both hope that consumers and members of the public will respond to this agenda and look for funds that have a high proportion of positive investment, but also that fund managers, including many of you in this room, and asset owners, will yourselves take the chance to want to show that you are making these investments in companies that will really make a difference. It's not that you also shouldn't be looking for good financial returns, but we're encouraging fund managers to look much harder for those companies that have positive impact as well as good returns. So with that challenge, I hope that we're going to see the launch of this campaign later this year, meet with lots of support, both from within the investment sector and outside. It is really important, and we hope you'll all join in support of it. Nō reira, tēnā koutou, tēnā koutou, tēnā tātou katoa. Okay. Now, would you all like to, while we're having a panel come up to the front, can you take out your phones and load up on Slido, because you're going to get a chance to ask questions, and we're not going to have roving mics and people asking questions on microphones. It's entirely on Slido. So please use the Slido available. Without further ado, this is a panel that is themed on positive outcomes. And I'd like to invite your facilitator and our co-CEO for Mindful Money, who's done a huge amount of work on putting this whole positive outcomes initiative together. Please welcome Kate Vanell.
Kia ora, and thank you, Barry. E na mana, e na waka, e na iureo, e rau rangatira ma, tēnā koutou katoa, ko Kate Vanell toko ingoa. So greetings, I'm Kate Vanell. I have the privilege of working with Barry as co-CEO of Mindful Money. So as Barry said, in this panel, we're exploring 3 globally important themes which generate positive outcomes for people and planet. We have 3 great Kiwi entities that represent case studies that all have investment by mainstream New Zealand retail funds, including KiwiSaver. They illustrate that you don't have to be a wealthy venture capital investor to be able to access good returns alongside positive outcomes. They are across some of the themes that are really exciting in transition at the moment, whether it's the clean energy transition, whether it's the biotech and health revolution, which is changing outcomes and closing gaps on some important diseases across the globe, or whether it's community housing and innovations in finance for affordable homes by the people for the people. We're going to explore how investment has powered the growth of these entities and the future opportunities that more investment could bring, as well as some of the things that have made these entities successful. So I'm delighted to welcome, we have Yasmin Winchester, who's Chief Technical Officer of Aroa Biosurgeries, an emerging global leader in regenerative tissue, and they are listed on the ASX and are the best kept secret in Auckland. They are based near the airport and export their products across the world. Yasmin is responsible for implementing Aroa's strategy for the sustainability of their operations and making sure that the medical devices they make are safe and effective. Gary Holden is MD of Lodestone Energy, is the driving force behind Lodestone's vision to bring solar to the mainstream market through a nationwide portfolio of utility-scale farms. He's worked for 3 decades in Aotearoa and Canada in just about every bit of the energy market. James Palmer is the founder and chief executive of Community Finance and Community Housing Funding Agency, and challenged by the scale of our affordable homes crisis, he's led a lot of innovation in how can finance be a force for good for our communities. So all great examples of 3 Kiwi entities that have grown really beyond the startup stage to reach a scale where now they get investment not only from New Zealand but beyond. So many of us are actually investors in these entities, but until now have not known it or known the exciting work they're doing. So please give a big welcome to our stellar panelists. Yeah. I would like questions from the audience, so please get going using the Slido code that was shown before, and start asking great questions. So I want to just invite each of our panelists to give a quick overview of what was the big problem you saw, what's been the key innovation, and what are the positive outcomes. So maybe starting with you, Yasmin.
Okay. Is that on?
Yeah, is it on?
Okay. Kia ora, I'm Yasmin from Aroa Biosurgery. So we were founded by our current CEO, veterinary surgeon Brian Ward, back in 2008. And he had a great idea that the stomachs of sheep can actually really help with healing outcomes. I guess he observed through trial and error in his garage laboratory that there was something really special about the stomach of sheep less than 12 months old. And so he developed the technology over time that we currently now have sold 7 million devices worldwide using. And so what it does, the positive outcome it has, is that it really helps patients with complex wounds or traumatic wounds to close those wounds. So some people have, wounds that have been open for months or years, and they really can't get that to heal. So our technology acts as a scaffold for them and for the body to heal into, and so that's really, really positive for them. It's also really shelf stable, so it can go to many places around the world and be used in many different applications.
Fantastic. That's a great example of health innovation. Gary.
Yeah, so we founded Lodestone in 2019 primarily on the back of the big signal that electricity was becoming more expensive, more carbon intensive. Electricity prices were having carbon baked into the price, and in countries like New Zealand, we were actually running out of natural gas to make electricity. And so the signal around 2015, 2017 period was that solar in large volumes was going to be highly economic. The cost of a solar farm today can make energy to put in a car that's the equivalent of about 15 cents a liter of travel distance. And so it really is a revolutionary moment for this kind of energy, and you can build it anywhere where there's sun and an interconnection and a paddock that's open to do it. And so we have a view that there's going to be a solar farm in every community. Every small town will have their own energy in the back paddock somewhere. And so we're on a path of doing that. We've raised 4 lots of capital, 50 million each, approximately over 4 years. We're building 2 or 3 $50 million solar farms a year now, and so the pace of growth is now hitting a stride that we can visualize. 15, 20, 25 towns in New Zealand having a large portion of their demand supplied with solar power in the next 5 to 7 years. And so we're now ready to raise one more block of capital. Probably the odds are that we would do that in an IPO, and then from that point on be self-funding on that growth path. So it's quite exciting for us to be able to do that, and we're hitting it at a time when we need a lot of electricity to replace the sources that are no longer viable. So that's why we exist, and thanks for having us.
An exciting story. Yeah, and James.
Thank you, and privileged to be here. So we saw that our country, like most of us know, have an affordable housing crisis that's measured in the billions, which is overwhelming. So just with the government's own housing register, as a country we need around 14 billion just to house the people on that list. So a multi-billion-dollar problem needs a multi-billion-dollar solution. And what we saw globally is that normally it wasn't banks at the forefront of financing community and affordable housing providers. It was an intermediary that consciously operated on lower margins. So 2019 was a great year, obviously for a couple of us up here, and so we launched this in 2019 with the aspiration that we could come in behind community and affordable housing providers in our country and provide lower cost finance. Because finance is actually the biggest expense over 25 years and usually the main component of each new home. And in the groups in our country were paying some of the highest rates around the world we could see. So fast forward to today, in 7 years and a few grey hairs along the way, we're now at $500 million of loans to 34 groups around the country and growing, which we're really proud of. Obviously, we need billions more to fix this. And the impact we're able to unlock also is what provides our investors that hopefully special outcome as well. So we issue New Zealand's only domestic social bonds, and we've got an A+ credit rating so that we can uniquely provide both a high quality impact and a high quality investment. And with the philanthropic capital we've raised from our shareholders, for every million they've put in, we're now at 55 million of loans, and in a year that will be around 100 million. So it's exciting.
Really interesting. Yeah, all great stories. I think what's an interesting feature of all three is that you've all started from nothing and grown to something. Typically, and someone's asked this question, typically outcomes like this are funded by venture funds. So each of you has had some sort of seed capital, and maybe Gary, you're kind of nearest the boundary in that you've had some of that seed capital and now you're getting fund manager capital. Can you sort of share a little bit about the challenges to get that venture capital, and now what's the benefit of getting fund manager and KiwiSaver money into Lodestone?
Yeah, I think it's just a matter of opening as many doors as possible. In the very beginning, we followed the traditional pattern. I got one investor to be interested, and then 25 investors, and then larger investors, and each block of capital came with more interest and obviously we're proving up the business model at the same time. And so, getting us now to the point where we can consider an IPO where we would open it up essentially to anyone who wanted to invest is just all a part of proving the model and getting the skill set together. We have a very innovative go-to-market strategy that's never been tried globally. And so the challenge perhaps has been to get people to understand why it works and why that innovation is worth putting more and more capital into it. And that innovation is essentially the simple idea that you could build a power plant in a town and sell it locally and compete directly with the big gentailers who make power centrally and distribute it through the transmission grid. And so finding a way where you could quite literally build a $50 million asset and sell it to 7,000 people in a town is not easy, and to get all the mechanics right. But now that we have it and we're about to get on a pattern of doing that over and over again, I think it will be picked up as an international practice, and eventually everyone will be doing that kind of thing. But that's getting that story, getting that process down to the point where it's believable and credible has been the challenge, and we're happily there now. So
yeah, and so new investment goes directly to scale up. Yeah,
we're a capital intensive business. We're going to be spending $2 to $3 million a week building these farms, and so getting the capital in and then generating a lot of cash to self-fund is what we have to accomplish now.
Yeah, and have you found the conversations are different between the two categories of investors? Different. Yeah, what would you say are some of the differences when you're speaking to a retail fund manager?
Yeah, well, if I start with the high net worth people, I pitched to 25 people during COVID through video and got 24 investors out of that process. And those days it was about selling the dream, and now it's about selling the mechanics and the skill set and the capability. And so it was really just transitioning from vision to being very pragmatic about how to execute, and that's been the path.
Yeah. Is that a sort of story that resonates with you, James? Again, you've had some money from initial kind of seed funders, and where would you say you're at now?
Didn't quite get 24 out of 25. So yes, and I think for us, where we've been able to get a lot of support from, particularly the high net worth families, was because we've always had the same North Star, the same vision for what we could do in the future. But you do have to start there and get your capital from someone. And we found they were the ones that were business savvy, they care about the country, and they were frustrated with the status quo. So they were a great way to start, and they would put in the capital and buy our first bonds. Yeah. But we wanted to mainstream impact investing, so we knew that we needed to create the investment for fund managers that would be high quality. So that was always where we wanted to get to.
Do you get more from fund managers? Is there more concern around returns or the outcomes, or where do the sort of conversations go?
Yeah, I think one of the interesting things is these are often highly intelligent people, and in my experience, so many of them actually really do care. But I think the issue we can sometimes have in our country with impact investing is that their genuine duty, first and foremost, to all of us, if it's a KiwiSaver provider, is it has to be a high quality investment. So if you want to do high scale, you need to have both, that 9 or 10 out of 10 on the investment side, and you have a byproduct of hopefully that positive impact too. And so we created that and still create it by us as an entity consciously operating on a lower margin. So banks in New Zealand run on a margin of around 2.5%. In Australia, it's about 1.5%. So imagine our little country if all finance was 1% cheaper. So we operate on a margin of less than 1%. So just us doing that enables a good investment plus those benefits for both government and the borrowers we're supporting.
Yeah, and so for the ultimate KiwiSaver investment, there isn't a trade-off. Yeah,
you can have your cake and eat it too.
Yeah, really interesting. Yasmin, I think Aroa's now been going 20 years, and you're now ASX listed. What has that listing done for Aroa, and what's the value of that?
So we listed on the ASX in 2020. I think we were one of the first companies to go through that process after COVID. So it was a big milestone for us, and it just enabled us to really grow the company. And we were able to invest more capital into growing our manufacturing capability. So we built more clean rooms and manufacturing plant to be able to continue to scale up our growth there. I mean, it really enabled us to invest more into R&D. So for medical device development, there's a lot that goes into it behind the scenes. You've got to go through the development stage, and then the regulatory approvals and the clinical evidence, and so there's really a lot of stuff behind getting that device to market that takes a lot of time, and it enabled us to really fast track that, put a lot more time and effort into it, grow the company, get more talent into the company to be able to contribute to those efforts as well, because it's very highly technical stuff that requires a lot of highly skilled people in there.
Do you find when you're talking to fund managers that they can understand that complexity, or do they just, do they lean into it, or do they get a bit risk averse?
Yeah, it's hard to explain that. Sometimes it is going to take time, so some patience is required. We do find a tour of the manufacturing facility helps people at times, so we're always welcoming people in to come and take a look so they can really understand what we've built and the amount of time and effort and thought that goes into it. But then just to show that there is really something there that is contributing to this.
Yeah, a really interesting point about the value of the tangible sight of some of this, which I imagine all of you can empathise with. Do you want to? And I guess what are some of the things that really build success in New Zealand? I think sometimes we feel we're at the end of the world, we're just a farm. There are still these attitudes around, but actually when you look at success factors for New Zealand businesses, what are some of the things that have powered your success?
Well, for me, being in energy, very fortunate to be in a market that's one of the most sophisticated electricity markets in the world. I was around in the 1990s building power plants when the market was deregulated, and we set up a model here that the world all, looked at and many places copied. It was very innovative, very forward-thinking. Many of the rules we wrote in 1995, we use now at Lodestone to sell power from a power station to a house. Those mechanics were invented in 1995, and just having the mature 30-year experience of the electricity market is putting us in a position to do something globally significant. And people think of New Zealand as a small country, but I think generally, not just in electricity, my view is that it tends to punch above its weight in just about every category, and so we're lucky to have the opportunity to take advantage of that.
Yeah. Do we have the technical skills here for what we need to build?
Well, I think you create ideas, you create innovations, and then it attracts good people, and we have had so much success in just using the highly skilled people in our industry to build this idea out, and we certainly don't feel like we're shortchanged at all intellectually or capability wise.
Yeah.
Is that on? Sorry. It's something that we're really proud of at Aroa is that we really love training people. We have a lot of people who have been within the company for many years, and really there's a lot of opportunity within there. And so it's something that I'm personally quite passionate about, is being able to grow that talent within New Zealand, bring people on for learning and education, and then also letting them out into the world. A lot of people who joined us have left us and they've gone to other medical startup companies, and so that's something that's really a good opportunity for the rest of the country too to benefit from.
Yeah, and actually, I mean, we do have a few healthcare companies in New Zealand, don't we? So starting to get that kind of ecosystem where you've got the talent and the jobs is quite a big side benefit of what you're doing there.
Yeah, definitely.
Yeah. And I think quality, because when we talked, you talked a lot about the importance of quality. We know that healthcare is a sector with quite a lot of regulatory risks and all of that. So how do you feel quality underpins what you do?
Well, my background is in quality assurance, so I'm probably quite biased towards it. But I think we have a really good framework and really good, it's all about keeping patients safe and having a good quality product that is reliable. So when you open the package and when you put it onto a wound or a traumatic injury, you know what you're going to get, and you know you're going to get the same outcome every time. And so that's what's most important, keeping people safe and getting them on their healing journey.
Yeah. Where do you sit, James? Somebody's asked a question about New Zealand fund managers and their appetite for illiquidity, i.e. you can't easily buy and sell some things like a solar farm or a community housing project. Is that a question you get from fund managers, and how do you or they manage that issue?
That's a really good question. I think it's a scale piece as well. So, rather than, I'm always cautious talking about returns, it's the quality of the investment itself. And there's so many components of that you need to actually meet for it to be a scalable and good quality investment. So in our world where we're selling debt for a bond product, liquidity is one of the hallmarks of what they're quite rightly looking for. And so to achieve that, there's the quality of the investment itself. And so for us now, that's with the government support and A+ credit rating. But if we did that and issued a $20 million bond, we wouldn't get the pricing advantage of an A+. So all the bonds we've issued in the last year, so we've just done nearly $500 million, they've all been a minimum size of 100 million, because what the market knows is you need lots of investors in the scale plus the quality for it to create that. So it's really important if you want to do scale. Liquidity is something, if you don't do it, you will pay a premium on, or they'll just not do it. And the risk then is that you're talking about innovation and then you compromise your impact. Because if you're expensive, you might not actually be creating a better outcome for the people you're trying to help.
Yeah, that's a really interesting insight about actually you do have to try and get it all in balance.
Yeah.
Yeah, and you'd have a similar challenge.
Well, for our part, we have lots of growth ahead of us. So we hope people would be attracted to the growth story and to invest and hold. We don't, there's 4 big generator retailers in our industry where liquidity is relatively easy to achieve, but they don't have the same ability to double twice in 5 years. And so we hope that people see that if you believe energy is a place to invest, and if you believe that renewable energy is a place to focus, and that the world is moving away from fossil fuel and seeking the energy we're making, that it's kind of a get on board and ride the growth curve. Growth seems to be favored more heavily in Australia than here. There seems to be at least in the infrastructure side, a bias towards dividend stocks, and so getting ourselves positioned to be a growth story in a sea of dividend stocks has been not intentional, because we were going to grow anyway, but we hope that will be an inherent attraction in the next 5 years.
Yeah, that's an interesting insight into the New Zealand stock market, and perhaps New Zealand analysts, are you saying, are also a bit biased towards where's the dividend?
Yeah.
And in Australia, I guess, what sort of difference do you see in the types of questions and conversations, and what might be behind Australians' greater appetite for growth?
I think there's more choices there. There's there's an IPO kind of standing up every few days there, and so there's lots of choice, and so I think that's a factor. I also think it's just the the nature of security around getting dividends is inherently more attractive, but we're in a business where growth hasn't been talked about for a very long time. I think the electricity industry didn't grow at all for 15 years, and so emerging now as a growth story in a market that's been pretty stable is new, and we hope will be exciting for people.
And maybe we can start to transition mindsets a little bit. Yasmin, and do you sort of pick up a difference when you deal with Australians and being listed on the ASX? They seem to have bigger healthcare infrastructure in terms of many more companies.
Yeah, and they've got a lot more biotech analysts to kind of weigh in on investment options as well.
Do we have any?
I don't think we do, or they're the same ones as on the
Yeah,
ASX,
so that's kind of a market gap, isn't there? If we don't have the analysts in New Zealand who want to or can understand the story, they can't then sell the story to New Zealand investors.
Yeah, absolutely.
Which is quite important. So anyone wants to have a career as a biotech analyst in New Zealand, I think there's a big market opening. I mean, do you, James, do you think that actually managers with big diversified funds, does the liquidity point need to be a barrier?
I think they're doing their duty. I think the real issue is this is a very safe room to be saying about, I think everyone here wishes and wants to be part of creating the world that it should have been, not the one we've got. But if we're raising money from fund managers, rather than someone's own, high net worth funds where they can do anything with it, then we actually have to play by their rules. It has to be the investment that they can do. What we've found over the years is, we in the early days were successful when we had someone that was intelligent, that cared, that was willing to be a champion to do something new.
Yeah.
I've actually found it easier raising money with fund managers, and often they have genuinely been excited about what they can do for New Zealand. So I've increased my estimation of who we've got here dramatically over the last few years, which is exciting. So I think we should be optimistic, but we've got to give them a good investment.
Yeah, and they are asking about good for New Zealand, are they?
Oh, definitely.
Are they asking for measurable positive outcomes? Because a few people have asked questions, and can you measure?
Yes.
You can.
But you can only get to that point if you've first crossed through the barrier and shown that this is something that can be in their portfolio.
Yeah, okay. And is it something they would seek out for the positive outcomes first or for the return first?
It has to be the latter, but it's also the investment class that fits for it, and the stronger the investment, the lower the return. So it's back to that earlier question, if you have a more highly liquid investment, they don't need as high a return, which means you could invest that more into more solar farms or into some of the advances you're talking about. For us, we'll also keep lowering our margin as we get bigger. So we'll continue to become more efficient each year, which will mean it's better for charities and better for government.
Yeah, that's an interesting point, that scale actually starts
Scale's
to change
huge.
the economies.
Very much so.
Yeah. Do you measure your outcomes, Gary?
Well, we certainly do. We sort of have two big outcomes that we think we're playing into. One is finding a way to get New Zealand away from burning natural gas to make electricity as soon as possible. And I've been around enough to know that if it built a business plan to sell electricity to a competitor would be a slower path than just competing directly. And so the first thing was just get cadence and speed and get that place where we don't use gas for electricity as soon as possible. And then the second is just by going directly to customers to get, solar is the lowest cost form of electricity ever invented. And so getting it in the hands of consumers directly as soon as possible created not only the environmental outcome of getting off gas, but also get people to get lower electricity to live their lives.
Is this something we could see in Auckland or Christchurch? Or does it have to, are you looking at smaller communities?
The solar farm in every community idea does work best when you start at the extremities of the grid. The electricity prices in places like North London and the East Cape and parts of Hawke's Bay are more expensive than other places. So hitting those places first is really quite a good thing to do. commercially and for the good of society. But eventually, as we work our way towards maybe bigger plants near the big cities, then eventually we'll sell directly in those cities too.
Do you start to get pushback from communities? I have had some friends from the Hawke's Bay kind of say, isn't this dreadful, this beautiful farmland, etc., etc. How do you...
Yeah, we're pretty cognizant of how easy it is to consent a small 50-hectare farm versus one that's 400 hectares. And so we intentionally wanted 50 hectares tucked behind a hedgerow so that people didn't even really feel the presence as being a very strong strategic idea.
Yeah.
There are other big farms happening, and we have a big one that we're developing in the Mackenzie district, but generally speaking, getting 60 small farms is better than getting 10 really large ones, and for all those reasons.
That sounds good. Coming also to kind of other side effects that you could have, I've had a question about animal welfare from Aroa. How do you square that circle?
Our material is a byproduct from the meat industry, and so the animals go for slaughter for other applications, and we do take the stomachs from the abattoir. Of course, New Zealand has really, really good animal welfare standards and regulations in place, and so you can definitely rest assured that the sheep until the point of slaughter are getting taken care of and are well looked after as per the regulations. But yeah, we don't keep a herd for ourselves. We are taking it from the meat industry as a byproduct.
Yeah. I've had a few questions about what you're doing, James. So in terms of the scale of each, you're issuing a bond for each project, correct?
That was the original model.
Right.
So, and that was back to, we started with, the high net worths, and they would buy a bond, and then we were looking to expand it. And in 2020, our first project was supporting the Salvation Army to raise 40 million. I thought our first project might be 10 million, so that was stressful, and COVID made it harder. And that was when Generate became the first KiwiSaver provider to do an investment like this, which was fantastic, and that was a catalyst for us. So the old model was there was a investment trust for each borrower, and we would, if we approved a loan, we would then have to manually raise it. And it was what we had to do this when we were on our own, but it was always not where we needed to get to. So the idea was to have what we now have, which is the Community Housing Funding Agency, which is a mouthful, so CHFA, and that one entity raises all the money from, whether it's a philanthropist, a bank, gets support from government, and issues the bonds, and then it's there to lend the money to the community housing providers. So that's now how we deal with it. And even last week, for example, we had 12 different drawdowns on one day. So there would have been no way we could have done that under the old model, and me be alive.
And the easiest way for any of us who want to support more housing in our communities, would you now say that's find a fund that's got some...
Very self-servingly, I would.
Yeah.
But I think,
And just to be clear, once we got our new tool, you'll be able to see where any of these entities and many others, whether they're in your fund or not in your fund.
Absolutely. And what you'll see is most are now, which is really exciting. But there are the odd omissions, so you will be able to see that, thanks to the wonderful work of Mindful Money soon.
Right, I think we should probably start to wrap up. Maybe a closing statement about why you think you can balance positive outcomes and investor returns.
Well, I think the key is to, and maybe in our world, it's been a little bit of, it was going to happen eventually, and we're just taking advantage of a situation where clean energy is the lowest cost. And so implementing something that's naturally smart from an environmental point of view, and also providing an economic benefit is really quite fortunate. There was a time when people dealing with solar power were trying to sell it at a premium, and it was quite difficult. And now we get the luxury of not having to do that. And so it's come down to, it's just get it done and get the systems in place to do it at pace. And Consumer New Zealand did a study recently. Something like 92% of the country would like to have solar, and only 7% can, because you need to own your own home. It has to be in the right the right kind of neighborhood, you have to have a sunny place, you have to have the right roof surface. And so finding a way and innovating the technology to build a farm and sell it to homeowners that can't put it on their own roof is unlocking a massive possibility, and it's just great that we can contemplate that and do it.
Yeah, in fact, I wouldn't be surprised if the demand could exceed the supply for that.
We actually are planning on this next one to sell it in one big bang on noon on Saturday on September 15th. The website is opening, and we do expect to sell a $50 million solar farm out in a weekend. So it's kind of that, down to that kind of
and that's in the Hawke's
position.
Bay, isn't it?
Yeah.
Yeah, great. Yeah, Yasmin.
Really allows us to continue to develop new products that can tackle different health needs of the population, and also just continue to manufacture more effectively, so we can make the most use of all the resources we have available to us, and continue to innovate to get a good return on investment. So it's just really helpful to get into that development phase.
Yeah, and I will say, some other healthcare companies have sort of sold out to big US conglomerates. Where would Aroa, is that your sort of future exit, or are you committed to the journey?
I think we're very much committed to the journey. We're really proud to be a New Zealand-based company, and the New Zealand sheep thing is a really big important thing for us, because we have such good standards for our animal health here.
Yeah, it's a great story. Thanks.
So I think for me, in the last 2 days, I'd say we've had 2 openings for homes around the country and 49 new homes open for people. So to me, that's the impact. These are, with the government support, genuinely affordable for people and life-changing. And we're just tallying up the numbers, but it will be well over 1,000 homes we're financing that are being built in various stages. So I think I'm in a very fortunate space where the impact we're doing is tangible, and having a warm, dry, affordable home is such a foundation we all need to have a life where you can thrive.
Yeah.
So we get to work with charities around the country that are on the front line of making a difference. If we can provide finance at scale that's more and more efficient each year, we're just going to help the country have more people in those homes. So the impact story is always the reason our team, our board, do it, but we're only scratching the surface of what we'll be doing. We'll be at over $1 billion in a year, and it's exciting.
And as you say, big differences to outcomes across a range of things when we have a good home. So really inspiring. So I think for me, and for all of us as ethical investors, it has been really uplifting to gain some insights into opportunities that are happening here in Aotearoa, where we can deliver both measurable positive outcomes and good returns. And that benefits all of us, whether it's better homes, better treatment of diabetic ulcers, where we do have an epidemic of diabetes in New Zealand, or it's more solar power and less coal. And I'm going to say something a bit controversial, but maybe it's going to seed into the next panel. What if just a little bit less money went to US trillionaires, and a little bit more of it stayed in New Zealand, so that more of it could go to great New Zealand enterprises, providing Kiwis with jobs, providing all of us with the benefits, and we would get good returns, and it would be sustainable. I'm not giving investment advice, obviously, but I'm putting it out there for all the fund managers and advisors in the room that it just feels like that could be a fantastic outcome and a big win for all of us. So that's, anything that the political panel wants to cover and how we might make that happen, I'll throw that challenge out. Please give a big thank you to our panelists. Huri noa, tēnā koutou katoa. Thank you.
Okay, everybody, we're ready for the second panel. Thank you all very much, and I thought that first panel was terrific. Congratulations to Kate for great facilitation and for a really interesting discussion from the panelists. So thanks very much for all of that. My great pleasure to introduce the political panel. So-called. We decided to have this panel because we were worried that important issues weren't going to be addressed at the election, and so we thought this would be a great time to do that. So without further ado, let me introduce our facilitator for this panel, Bridget Coates.
Thank you. Thank you, Barry. I'll just stand up here for a minute and then I'll take my seat. The political panel, the fun part, and hopefully I have people who are going to join with me in making this as interesting and as engaging and stimulating as possible. So our primary focus with this section of the agenda is a session that engages all of you as our audience on some of the key issues on investment and sustainability that should be the major issues for our election in November. In the past, we've had politicians in this slot, and those of you who've been here in previous years, but most of what we got, unfortunately, was political slogans, posturing, and a general unwillingness to listen to each other, and a great difficulty to actually get any decent discussion going. So this is a crucial election. These issues that are related to sustainability and that we're going to address today are completely fundamental, and it's very easy that to believe that they might be lost in the noise of the political process. So we want to bring focus and spotlight to these things that really matter for our future. We have an afternoon of exciting and bold ideas for you, 4 diverse, hugely impressive and hugely compelling voices, all of whom are driving change for a positive future. This panel is essentially a platform for each of them to pitch a vital issue that they believe should be high on the agenda for the election, a topic which they believe should be at the heart of this election, but in fact may not be. So our panelists are in order of presenting: Nicola Toki. Nicola, until recently, was Chief Executive of Forest and Bird. Helen Robinson, welcome Helen, the Auckland City Missioner, CEO Manutaki. Fraser Whineray, Fraser's going to discuss his huge work that he's doing on KiwiSaver 2.0 that many of you will already be familiar with, but it's a great chance to hear more. And finally, Mike Casey from Rewiring Aotearoa, many of whom you will know Mike already. So each one of them is a passionate advocate for the issues that they represent, and we are all deeply grateful to each one of them for making the time to be with us today. We're looking forward to their leadership. We're looking forward to their compelling advocacy, and my expectation is that they will engage, energise and inform us, encouraging us all to take their vital messages out of this room and into the wider community during this election season. They will each speak for about 8 minutes, and then we will have 3 or 4 minutes for questions. We'll pick the questions that are up-rated on Slido, so if you like a question, push it up. Please upvote the questions so that the questions you want to ask are the ones that we get to. Then we're going to have a panel discussion afterwards on each topic, and we'll give everybody a chance to participate and discuss these further. And Barry will come up at the end and talk a little bit more about how the roundtable discussions are going to work. So, with no further ado, we will start. And Nicola, please. Thank you.
Tēnā koutou katoa, mihi nui, kia koutou, ki te ranga, raurangatirama, tēnā koe, ki te mana whenua, tēnā koe, ko Nicola Toki. Hau, kia ora. No pressure, be exciting. I know there's lots of money people in the room, so I thought I'd start with some figures. And I guess I want us all to think about, I guess my plea at this point is, will nobody think of the nature and I saw a little bit of it in Barry's talk around how much investment ends up going into biodiversity and nature, of which, of course, we are part. So I will start with some figures from IPBES, and a few years ago I had the privilege of being head of delegation for New Zealand to the Intergovernmental Policy Platform on Biodiversity and Ecosystem Services. What a mouthful. If you want a more simpler version, it's the nature version of the IPCC. IPBES recently released a report on transformative change worldwide, and it gave these pretty stark figures. 54.9% of global GDP is generated by companies who rely on nature to a moderate or high extent. So that's $58 trillion versus, stand by, I've reached that age, 0.14% channeled back to nature per annum. 0.14. And we see that here in New Zealand, where over time we've asked conservation to do more and more with a smaller slice of the public purse. Today in New Zealand, less than 0.5% of government spending supports the agency we think is responsible for managing a third of the country, all of our huts, tracks, bridges, culverts, other infrastructure, as well as addressing pests from wilding pines to possums, from wasps to wallabies, not to mention, I haven't even got to the crucial role of protecting 4,000 threatened species, 900 of which are on the edge of extinction. That's pretty bad. That's bad statistic, and I'll talk a little bit more about that. But even worse is that the biennial public survey carried out on perceptions of the New Zealand environment shows the proportion of the New Zealand public who think that wildlife is doing okay is going up, and we're telling ourselves a story that isn't true. So, I want to talk about why investing in nature makes financial sense. This is the bad news slide that's fun to start with, and once upon a time I used to manage a team of scientists, and I would have fired them all for putting this much detail on a slide, but this is March's World Economic Forum projected risks for the next 10 years, and you can see that half of them relate to the natural sector, if you like. So extreme weather events, biodiversity loss, ecosystem collapse, critical change to earth systems, natural resource shortages, and pollution. On top of that, we've got increasing social polarisation, which we are seeing here in New Zealand if you look at the news on any given day. So what we've tended to do in New Zealand is looks a bit like this. So we've put a fence around it, we've called it protected, sometimes we call it a national park. If you're a tangata whenua, that's a bit of a slap in the face because you then legally can't access your mahinga kai. It focuses on lines on a map, not fostering abundance, and we all kind of rest on our laurels and think, well, this is okay because someone else is taking care of it. There'll be a ranger out there doing some rangering. It'll all be okay. And biodiversity is still tanking. If any of you saw the headlines on RNZ this morning, the current Conservation Amendment Bill proposes to put 60% of public conservation land at risk of being sold. And I know there's lots of money people in the room, so once you sell it, you can't sell it again if you're the government. So not, I would have thought, the greatest financial strategy, also look at, selling the thing that props up our economy. So political parties, this is fun, this is an old Labour, some of you may remember it, ad for a campaign, I want to say in the 1970s. But political parties have always considered nature a cost to society, and they do one of two things. The current iteration thinks that it is a cost taker, and so we should just cut it down even further than it already is. And I'll get to this in a second, but the Department of Conservation, who are out there doing all that work that props up our variously first or second highest export earner in the country, not to mention the other first or second highest export industry in the country, just, if you don't know, is on a budget of less than the Christchurch City Council. So it's being asked to do an impossible task, but the other version is to do this, which I touched on earlier, which is put a dome over it and say that's protected now, which does not include people, it does not include iwi, hapu and whānau, and more importantly it doesn't include us, and so we tend not to connect with it as much as we might have because it's over there behind that fence with a dock sign out the front saying it's all looked after, so don't worry. And in New Zealand, when international investment models come to the fore, we tend to wrinkle up our noses at them and say that, oh no, that's not something we do. So we need to start thinking about both sides of the ledger. I want to talk about how much we love to be number one. So there are our friends on Mount Everest who were the first to get there. Oh, I mean, it was a British expedition, but okay, New Zealander. And well, obviously the first to give women the vote. Guess what else we're number one at? We are number one for having the highest proportion of threatened species in the world. Number one. That's probably what I would consider a dubious honour. And further to that, if it wasn't just about our sort of national and global responsibility to look after these things that define us, it makes economic sense because this is quite important. I noticed that the government gave Tourism New Zealand another $5 million to sell us to the world today. I'm not sure what they'll be selling. Maybe people can come and look at a real estate sign in front of Fiordland National Park. And it's not going to support our economy. People do not come to New Zealand to visit Westfield Mall. It is part of our national identity, right? And by that, regardless of where you came from to find yourself here in New Zealand by your ancestry, you are either connected by virtue of whakapapa or you are connected by the very strong internationally proven research which shows that despite the fact that 87% of us live in towns and cities, we rate higher than any other country in the world for our citizens' view of our connection to nature. Now, I find that amazing, right? So we're not living in nature. We've all kind of come off the farms in the last 2 generations, but we still entirely identify as a nation that is connected to nature. And it is so strong that when they did the international research on this, which was essentially about how to sell shit to people, of countries around the world, New Zealanders' connection to nature was described as, if you removed New Zealanders from their sense of connection to nature, it would be akin to severing an artery. And by the way, when we do stuff, we get it really, really right. So I know we've got some Ngāi whānau in the audience. This is an incredible program that took a bird that was once in the top 3 most common birds in the country, found from Cape Reinga to Bluff, where early explorers talked about shaking a bush and having half a dozen kakapo fall down like apples, to just 51 in the early 1990s. Doc, Meridian and Ngāi Tahu have been able to work together to get hundreds, I think there are 240 something adults and they're about to add 90 to the troop. What the problem for kakapo now is we've run out of room. So we don't have anywhere to put them where there aren't little small bitey furry things. The other thing, of course, is investing in nature protects our communities. I'll probably get in trouble for sharing this, but we know that natural infrastructure works. We know that wetlands protect farms from droughts, protect them from floods, protect communities from floods, and to invest in nature is to invest in climate resilience. The problem is that for a long, long time, over many, many iterations of flavours of government, is we haven't thought about both sides of the ledger. So we know, because Doc's finally done the calculations and done a brilliant job of them, that the actual cost of protecting the things we care about in New Zealand is $2.3 billion. Just glanced at my clock, so I'm going to go real quick. And what we've done is continued to cut it down. Further than that, we have this opportunity. And we have a growing opportunity that internationally companies are jumping on and innovating and evolving in terms of nature credits, importantly nature credit verification, because how you measure a carbon, I think is fairly straightforward. I don't know how, but how you measure a nature or a biodiversity is quite tricky. But other countries are doing this and doing it well. And we have an opportunity to wake up and get on the bandwagon. And then finally, this is a work slide really. what tends to happen with the conservation sector and the environment sector in New Zealand is either they fight amongst themselves, or they fight with other sectors, or they tell everyone else they're not doing enough. And what we need to do is work together on the opportunities where the middle of the Venn diagram lies to invest strategically in nature so that we all, nature, the wildlife and our wallets, get a sustainable financial return. Kia ora.
Kia ora, that was terrific, thank you. Lots and lots of energy and lots of ideas for questions at the end, so please use Slido. Thank you. Welcome.
Thank you.
Helen is our city missioner in Auckland. Many of you will know Helen, and especially you will know Homeground, which is truly a fantastic credit to all of the work that Helen has done and her team.
Not just me.
Fantastic, and we're so enthusiastic to hear about what you have to say about homelessness and poverty and what we can be doing, how New Zealand can actually be doing a lot better than it is at the moment.
Lovely.
Please.
Tēnā koutou katoa. Thank you so much for the welcome to be here with a room of people that I can't help but feel the hope, the inspiration and the thoughtfulness, actually. The very fact that you're here is saying something significant. I want to acknowledge Jenny Giblin, my colleague who is here with me today, and David Takao, who is also our board member. We get to dual kind of commit there. And many, many people in the room actually who I know are supporters and donors of Te Sāpui Atawhai, the Auckland City Mission. I'm also conscious, and I think we've already had James up here too, but Rowan and others in the room who have given years of their life in responding to the reality of homelessness in our country. So while it's literally me up here now, what I want to acknowledge is that it's actually us. And I'll talk a little bit more about that in a minute. The Auckland City Mission is 106 years old, based at Homeground, as Bridget said, so we're literally a couple of blocks up. I literally just had to walk down. And ever since our inception 106 years ago, our defining factor or our vision is to seek out the reality of suffering in our city and our country and to do something about it. And really, really importantly, and perhaps I'm not sure what's harder, is to dare to ask the question, why is it like this? And in fact, when I ask that question, why is it like this, it's very interesting how very quickly it leads me to this room. The 23 census data, 113,000 people in our country in 23 were severely housing deprived. More of that 113,000 were women, and with women, of course, always comes children. So when you think about homelessness in our country, often people think about the kind of traditional vagrant, the single man who is roaming our streets. And while that is a reality and part of our truth, it's really, really important to know that when we are talking about homelessness in our country, the majority of whom are women and women with children. There was a report literally released last week that said 33,000 of New Zealand's children are homeless. And then you just sit with that reality, and so in our 106 years, one way, shape or form, just when I think we're being innovative or doing something new, I read our history books and I see that we've always been involved in the homing game. The second thing that you can never get far from at the mission is the reality of food. So in New Zealand today, according to the New Zealand Health Survey, somewhere between 23 to 24% of New Zealand's children today don't have enough food. I'll say that again. Somewhere between 23 to 24% of New Zealand's children today don't have enough food. And it gets even worse when you start to realise 1 in 3 Māori children today don't have enough money for food, and 1 in 2 Pacifica children. The Auckland City Mission in the country has the dubious honour of being the single largest provider of food, but across the country, the second to the Salvation Army. With our partners here in Auckland, we distribute just over 30,000 food parcels a year. Every one of those feeds a family of 4 for 3 meals for 4 days. If we had support, a lot more could go out the door. Somewhere between 10 a.m. to 12 p.m. every day at the mission, we get a phone call asking for support for food, and we have to say, I'm sorry, our daily allocation has run out. By the time you are coming to access food at the mission, you have already gone to work and income, and you have often already exercised or done everything within your power to actually get food where you can in your familial and community and school networks. Sometimes you've gone to other food providers, and you come to us, and to the great shame on me as the leader of this organisation and as a person who belongs to this country of ours, I say, I'm sorry, we don't have food to give you. We have a medical centre at home ground called the Quarter Centre, a primary healthcare centre. If any of you live in central city Auckland, rock up and enrol, you're all very welcome. We have just over 2,500 or just under 2,500 people enrolled there. A number of years ago we were given another dubious honour of being the highest need centre in our country, primary healthcare centre in our country. The average age of death at the Auckland City Mission is 55. We bury or support, or people die connected to the mission, about 2 every month. And each year at Matariki, to acknowledge Pohutukawa, we gather and we say each one of those names out loud. You come to our place, and I will give you a name to read out loud. You do that, and you see what it does to you. I'm not here for a political pitch today. In fact, it's the exact opposite. It's almost, and I wish I had another word, that I am begging you, and not for money, not directly. What I am begging of you is to stand up, to take the gift and the resource and the knowledge and the understanding that you have in service of our people. If it is not you, who is it? Very, very early on, I came to understand the reality that we are constructing it this way. It is to New Zealand's benefit at the moment that 113,000 people don't have a home. It is to New Zealand's benefit that somewhere between 23 to 24% of our children don't have enough food today. Now, the shocking and the extraordinarily confronting thing of belonging to the mission and being part of it is that I cannot escape our own shadow and our own avoidance. We live and belong to such an extraordinary country that is full of innovation and generosity and compassion, and we have a possibility for a vision where there is enough for all of us. in realising that there are some extraordinary shadows that we as a nation are called into. The impact of colonisation, the alienation of land, the racism that is thick in our country, the degradation of women, the devaluing of parenting, and the fact that hundreds of thousands of our children don't have enough tonight, and we are not collectively outraged by that. And I get to marry that with one of the most beautiful emails that I get every night or 5 nights a week. Literally what goes into our bank account. So somewhere between, I get an email that says something like 17 people donated to the mission last night, somewhere between $5 and $100. And I don't get that 1 night a week, I get that 5 nights a week, 52 weeks a year. Now, I don't care about the quantum, not really. What I care about is the person and the intent and the longing and the dream and the vision and the value set that says we can do this differently. Like, this place of ours is rich in goodness from the whenua up and through and out and on, and so deeply inside of each of us. And it requires courage and bravery and honesty and authenticity and a willingness to go deep into the parts of our collective nationhood that we are so avoidant and resistant of. And what I know is that until you do that, until I do that, the most vulnerable will pay the highest cost. And that's on us. Stand up. Take your place. Take courage. Get that sense of that collective vision and help get us there. Please.
Helen, thank you. It does serve us all to be very much reminded, as you have done, so I'm sure we're all very affected by what you've said. Thank you. We will now ask Fraser to take us into another realm of our economy and society and broaden the debate in what is an incredibly important area. You know, where our savings are coming from, how they're being used. And Helen, it does relate to where you're having the difficulty as well. The money is not being well used, as Fraser will tell us. So, Fraser, welcome. Thank you.
Thanks, Bridget. Thanks, Bridget. Kia ora tātou and tēnei te mihi kia koutou, Helen and Karen for taking us through your mihi. The objective of, I think, a political panel is to, and it's already been touched on, ultimately be apolitical, because otherwise we bounce back and forth on a 3-year trajectory. And in what I'll talk about today with KiwiSaver 2.0, it is designed around threading a politically ambidextrous needle, because we've heard about the environment, which is, of course, something to treasure in perpetuity, but retirement savings is something that you're betting on 22 election cycles from birth to when you're technically supposed to retire at 65, and that's a pretty big bet to make if things are bouncing around. To make it politically ambidextrous, we have to strip away the goodies and baddies narrative, which is so popular these days from all sides of the political spectrum. Because life is not a Disney movie here. It's a little more subtle. what I'll talk about with KiwiSaver too, as I'm going through it, you'll probably think, who's paying for this? This is fiscally neutral, and I can explain why. And it's not just the financial leg of today's talk, it's actually a social leg as well, and integrates also with environment, depending on how those funds are invested. This all started in 2019 when I was on the Business Advisory Council to the Ardern government, and picked it up last year. This isn't my job, I don't run a fund, and I'm not getting paid for it. Though my conflict of interest would be that as a director of certain companies, which I don't get KiwiSaver employer contributions for, maybe after this I will too get some KiwiSaver contributions from my employer. So if you're looking for a conflict of interest, there it is. So what I'll do with KiwiSaver too is just talk about the journey through a girl's life, Maya, who's born next year, where by 1 July 2027, ideally a lot of this is in place. So Maya's born next year, and before she gets home from the maternity ward, her default fund KiwiSaver account is opened by the IRD and has $5,000 put in it, and that fund is on a growth setting. And that is the start of the journey, which is that every Kiwi child is born invested. That's $300 million for 60,000 births. Maya's family sets up payments of just $5 a month. And I know that's a lot of money for people that are struggling to even have food on the table. But let's say it was just $5 a month. Maya's KiwiSaver account gets $40 credited from the auntie for the birthday. And that $100, all the way through to 18 for Maya, gets matched by $100 a year from the government. And then, so her balance is going up by $200 a year, plus the investment earnings. What does that cost? Up to 120 million. So that's 420 we're up to so far, if you're doing the maths. At school, the social studies curriculum includes KiwiSaver. Everyone has an account. Everyone has roughly the same amount in it. There's no, Helen's come from a poor family and Mike has come from a rich one, so they all feel embarrassed in the class talking about it. It's part of the curriculum. And they learn about the benefits of saving, compounding interest, and what the KiwiSaver is invested in, which is where Barry's and Mindful Money's team comes into play. The class learns about economic cycles. They can't withdraw, they can't take it off a growth setting, so they certainly learn to ride the panic through market volatility. And you've seen the likes of the New Zealand Super Fund show how that's done with some class. At 16, Maya gets some after-school work. There's no age restriction on when you get KiwiSaver employer contributions, so they go into her account on top of her earnings, not in substitution of, as can happen with half the workforce today. At 18, Maya's KiwiSaver balance is between $20,000 and $25,000. The average 18-year-old today, by the way, is about $3,000. Every child has one of those balances, 70% of which comes from the first $5,000, not the matching. 85% of kids today that are 18 don't have a KiwiSaver account. Maya's balance is essentially the same as every other 18-year-old, irrespective of postcode, and that's a tremendous statement on intergenerational equity. And 47 years later, at 65, this balance alone, with no other contributions, will be worth close to $500,000. So that's every young adult backed, financially engaged, and they'll certainly know what the S&P 500 is and be able to contrast that with some of the other investments we heard about on the previous panel. Maya does some tertiary study and has a student loan. They don't net them off. She knows it's better to have the investments compounding than to settle off a balance on an interest-free loan from the government, because she's financially savvy. Maya secures full-time work with automatic KiwiSaver employer contributions of 12% of base earnings. They're not subtracted from her take-home pay, they go on top. And when Maya was born in 2027, she knew that the compulsory employer contribution was 2%. Has to go backwards, has to pick everyone up, be made compulsory, and it went up at 0.5% a year for 20 years to get to 12. Maya can add more if she wants. She knows that the balance belongs to her. It's free from political interference, and she'll be able to access her account from 65 years old, irrespective of what happens to other retirement settings like NZ Super. Maya decides to purchase her first home. She can take out 50%. So she remembers 20 years ago, it used to be everything but $1,000. But she knows that bigger KiwiSaver balances shouldn't be used to spruik the housing market further out of everyone's reach. So half of her KiwiSaver fund can do that. When Maya takes parental leave on 3 occasions for 3 children, her KiwiSaver account still receives the compulsory employer contribution, and that's paid for by the government. And that's between 40 and 70 million. So I'm just shy of $500 million so far. This adds approximately, those 3 gaps in Maya's childbearing age adds $230,000 to her savings balance at 65 against the counterfactual. She's pleased that while her earnings, she takes time out of work, her savings don't. She has to dip into some KiwiSaver for some unexpected costs. Maya's able to do so up to a fixed limit, providing some flexibility, because Maya knows that if the withdrawal caps weren't there for hardship, worse situations could arise, including coercion and standover tactics, and she takes comfort that this protects her and her retirement savings. In 2092, Maya turns 65. She's got access to a KiwiSaver account with a balance of about 2.8 million, equivalent to 1.2 million in today's dollars. She decides to keep working anyway, flexibly beyond 65, and receives KiwiSaver contributions. Her partner, Maya's partner, accessed KiwiSaver at 62, and the trade for that was it has to come from its accumulation fund rather than as a lump sum. This is a fair balance. Finally, Maya takes comfort knowing she'll be able to pass on the residual KiwiSaver balances to her descendants to give them support at key times in their lives, because she knows that unused NZ Super is not capable of a bequest. So if you think you're getting your KiwiSaver at 65 years old, that's not how the law's written. 99.99% of New Zealanders don't know that. That's one of the minimum things that needs to be tidied up. And this has come about, this set of policy settings which went to all the political party leaders in the middle of March, from talking to more than 30 organisations. Global Women, Ngāi Tahu, who's in the room, the Aotearoa scheme, which has many similar elements around birth, unions, everyone, because it needs to be politically ambidextrous. And now that first bit of newborn auto-enrolment and contribution has 76% electoral support, which is supermajority, which is what you need to get it through 6 elections, have the cement dry, and then no politician will dare touch it when everyone's enrolled. That's how we make it apolitical and make it stick. So we're engaged with all the political parties, I am, and they're well aware of how this is polling. It's fiscally neutral, and that's done by taking away the $260, which was last year $520, which previous to that was $1,000. That is worth $500 to $600 million a year, and that's going to people between 18 and 64 who are already enrolled and contributing to KiwiSaver, which is a horrifically regressive allocation of money to those that probably aren't in nearly as much need of it compared to everyone getting it at birth. So that's KiwiSaver 2.0. It's about every Kiwi child born and vested. Thanks.
Fraser, thank you. A lot of questions coming in, and a lot of work on Fraser's part, but some real success in making this come forward into the political arena, and a lot of support emerging around the country. So thank you. Mike, please.
Thank you.
Looking forward to hearing from you.
All right, well, tēnā koutou katoa e te whānau. It is an absolute pleasure to be here today on the political panel, and I 100% agree with you. This needs to be apolitical. I am here to talk to you about New Zealand-made energy. This is our future, right? To give you a bit of background super quick, I am an electric cherry farmer from central Otago. I grow electric cherries. You might think that is because of the taste of my amazing cherries, but no, it is actually because we run our farm on 21 electric machines. Not a single drop of diesel, not a single ounce of gas. Absolutely everything on our farm is electric, right? 92% of the energy that we use on our farm, we generate ourselves. And this has led to quite a remarkable outcome for me as a business owner. I have turned a $50,000 a year diesel bill into a $25,000 energy revenue stream for my farm. Remarkable. And I think we need to be doing this for our entire country. To understand why, we must first look at New Zealand's energy system. And we must understand that while, yes, our electricity system is highly renewable, our economy is not very renewable at all. 2/3 of the energy that drives our economy is fossil fuels, and the large majority of that is imported from overseas. Foreign energy, not New Zealand-made energy, right? Where is that energy consumed? Well, it's consumed in 10 million machines. 700,000 of those machines, like the 64 hot air balloons in New Zealand, simply cannot be electrified yet, right? We are going to park those to one side. And we're going to spend all our time instead talking about the million machines in New Zealand that require our electrification superheroes, the ones that will go the extra mile to electrify the things in their lives. But mostly, we're going to talk about the 8.5 million machines in New Zealand that are ready to be electrified today with today's technology. And this is such an economic opportunity for our country, and it is very, very simple for us to achieve. I want everyone in this room and everyone in New Zealand to make 6 good decisions in the next 10 years. That's all I ask of New Zealanders, right? What are those 6 decisions? Well, it is the way that we travel around this beautiful country of ours. It's the way that we cook our food. It's the way that we heat our water. It's the way that we heat our rooms. And it's the 2 new appliances coming to most homes in New Zealand, which is solar on the roof and a battery in the garage. Now, if we finance all of these machines in our homes at 5.5% and we electrify every home in New Zealand, the homes collectively will save $29 million a day. $29 million a day, right? That is such a huge amount of money that if everyone bought electric machines moving forward for their homes, by 2040, that's nearly $100 billion. Again, so much money, New Zealanders cannot contextualise how much that is. So to give you an example, we could not build rugby stadiums fast enough to keep up with the household savings of New Zealanders. We certainly couldn't build Dunedin hospitals fast enough. We can't even build one right now. And it also shows you just how expensive Queenstown roundabouts can truly be, right? This is why I am all about New Zealand-made energy. And we must ground ourselves in the fact that if we are going to electrify 10 million machines in New Zealand to run off New Zealand-made energy, we will need twice as much electricity as we currently produce. That is the big challenge for New Zealand. And it's guys like Gary in the room. Are you still here? Have you bailed? There he is. It's guys like him that are concentrating on building all the big stuff that we need. And us as New Zealanders must make sure that we remove as much of the barriers standing in the way from building the big stuff we need to push our economy forward. But we must also land with our politicians this very important fact. We're also going to need a lot of small stuff. I don't think we can explain it any better, the efficiencies of the small stuff, than this. One 22-kilogram solar panel installed on a rooftop in New Zealand over its lifetime will generate the same amount of electricity as 10 tonnes of coal being burnt at Huntly. One 22-kilogram solar panel. One $130 solar panel will generate the same amount of electricity as putting 15 grand's worth of diesel through a generator, right? This is the economic opportunity for our country. And if 80% of the homes in New Zealand had rooftop solar, I know Gary said 40, asked the Slido question, we'll go into why we disagree on that, but 80% of the homes have rooftop solar, which is totally achievable because that's exactly what the Australians think they're going to get by 2050. That's 40% more renewable electricity for New Zealand's electricity system. And the households all save money, all right? But even more importantly, 80% of the homes having rooftop solar on their roofs. Well, in 2024, our latest dry year, we would have had about another month's worth of water storage, right? Because solar indeed does work in winter. Now, Fraser and I, right, we've been jousting a bit on LinkedIn recently about New Zealand's energy future, but I think we're at the point now where we actually agree on these things, right? I've been about pushing renewables to solve dry year problem, all right? Fraser, I think, rightly pointed out that we may need some fossil fuels. As he puts it, the peppering of the steak, a little bit of coal to keep our system going. The point here is we don't need 100% renewable electricity, we need 200% renewable electricity, right? And we need it to be New Zealand-made energy, which is why things like LNG terminals need to not happen. They need to be dead in the water. Now, for everybody in this room who is in the finance space, this is what we need to achieve for our country. We have to swap the fuels for the finance, right? Now, to put it simply, at the moment, only 2% of the households of New Zealand are allowed into the Green Loan Club, all right? 4 out of 5 households in New Zealand will get rejected at the door on a 0 to 1% loan over 3 to 4 years, right? We have to do better than this. We have to figure out how to finance everyone into this transition, because the savings will pay for the interest and the capital and still give that whānau additional money per year. So how do we solve for the elderly couple that doesn't have an income anymore but has a home? Right? We're putting solar panels on their roof. The savings from those solar panels will pay the interest, the capital, and still give them an additional $1,000 a year. We could put that into Fraser's KiwiSaver and we could keep pushing forward with that, right? We have to get our communities off gas. How do we make it easy? How do we Apple Pay the solution so people can just go, you know what? It's time to get off gas, right? And how do we solve this problem for our renters who do not have the homes available? Do not own the home, sorry, to get this finance. And this is what this political panel is all about. We need to unlock Wellington to make this energy transition happen, right? I want this election to be an electric election. Please practice saying that or you'll end up with a Chris Hipkins level faux pas, right? Right? Energy impact loans through something called the Ratepayers Assistance Scheme. Long-term, low-interest, flexible finance that goes on any rateable property in New Zealand where the savings pays for the finance, right? Warmer Kiwi homes, let's make it electric Kiwi homes. Rather than just heat pumps and pink bats, where is the opportunity to include solar panels, hot water heat pumps, all of those kinds of things into warmer Kiwi homes? Can we rebrand it electric Kiwi homes? And one of the things that I am most excited about is the opportunity for plug-in solar. You'll be able to go down to Bunnings or Mitre 10, spend $300, buy a solar panel and save somewhere between 17 and 14% on your energy bills immediately, right? These are the options that are now available to the customers of New Zealand that I am very, very excited about. So to everyone in this room today, please, in the next 10 years, I want you to electrify everything. If you do, you'll be contributing towards the $29 million a year that the households of New Zealand will be saving by going electric. And then once you've done that, well, then it's time to electrify everyone in your life. My dad, an ACT Party candidate for the Wairarapa, fully electric father. Right? My mum, massive Green Party supporter, fully electric mum. And you can see why they're both happily remarried now, right? But the point in all of this is that they are fully electric. Now, many of you in the room will have already made up your minds about who you're going to vote for on November 7. Some of you might be getting close. Doesn't matter. I need everyone to be talking to their political leaders about the fact that we need to make New Zealand electric. Kia ora.
Yikes, that's fantastic. Thank you, Mike. Terrific. We have a very short, unfortunately, 2 minutes before we have to wrap this panel up. But I think the best way to do this now is to say to each of the panel members, What is there about the mindset, the way that we're thinking about issues that leaves us stuck in the what we can't do rather than what we can do? What is the opportunity to change the dialogue, and what is the aspiration that we could bring to bear as we leave here and as we talk to others in our whānau or in our communities? So, you first? Sure. Each and relatively brief.
Of
Thanks.
course. I think the worst thing that we could do to walk away from this panel would be to say, oh yeah, well, Nicola talked about nature, and Fraser talked about KiwiSaver, and Mike talked about electricity, and Helen talked about homelessness, and those are all separate things. They're all the same thing. So if we want a country that cares about its people, that is prosperous because of nature, which is connected to renewable energy and funds the future for Maya and all her mates, these are all the same things. These are all about having good ideas for a country that used to punch above its weight in terms of the way it positioned itself in the world, and we've got stuck into sectors. And we came and gave you 4 different ideas, but they could all be the same one if we get this right.
Terrific. Thank you. Helen, would you like to comment?
The quote that was going through my head, I think it's Thomas Merton actually. He says, how do I tell people they're shining like the sun? So there is something deep within us that avoids or is frightened by just how extraordinary and possible this is. Take the leap.
Thank you. Fraser?
Yeah, sure. Yeah, I think take Nicola's and Helen's comments. It's been quite an interesting journey. I'm not a fund manager by history. And so I've been learning a lot about KiwiSaver, and people have been incredibly generous when I've cold called them to say, hey, I want to come and talk to you about this, with people that I wouldn't normally hang out with. But then I said to one group who were very hard left, I said, there's people that you wouldn't normally have a drink with, and them you, but you actually have an incredible amount in common. So we kind of have to just... To them, I said, we're going to have to drop the tribal thing here, and we're actually just going to have to find what's actually in the middle of the Venn diagram. And so having found that, then one of the interesting things now that I'm looking at with this KiwiSaver thing, again, it's just an really interesting journey, is, well, if 76% of the electorate support it, which is 72% if you're Te Pāti Māori through to 84% if you're the National Party, then why won't it happen? And that's the thing. I don't know. I've got no idea how to get from here to some legislation, but and I don't want to get involved in the machinery of Wellington. Otherwise, I'll lose the will to live. But why wouldn't it happen if that's what the voter base actually across every political party wants? And so I'm really interested to see how this next bit plays out.
Terrific.
Oh, and I think super quickly from me. Be politically ambiguous. You don't have to lead out with the tribe that you belong to. Lead out with the vision for the country. And once that vision has been communicated, well, then maybe we can just bicker over what politics is or what policy is the best policy.
Terrific. Absolutely fantastic panel. Thank you so much, everybody. Really, really good. Thank you.
What a fantastic panel, and thank you all, and thank you, Bridget, for facilitating. That was great.
Thank you.
That's really passionate. Lovely.